All right, so it's been a long time coming, and I wanted to wait not towards the end of the presentation, but I know that there's a lot going on here for Octavio, so I wanted to address it all when I'd cleared the board pretty much of everything else. All right, so let's take a look at the custom spread. Octavio says, Mike, the question, I'm sorry, Octavio, I have to use the small window to scroll through your questions. It doesn't let me scroll through the bigger blocks, so I've got to go one at a time. Question number 1, how do I find in PowerOptions weekly stocks with 78 to 80% probability, 78 to 80% probability OTM, and how can I add the weekly stocks with, 78 to 80% probability OTM, how can I add the 78-80 probability OTM to the PowerOption weekly naked put screens? Okay, sorry, so ignore the whole CMG thing there. All right, naked put. Search, depending on what your outlook is, Octavio, you don't need to use our defaults, but you can. Sorry about that. Okay, here's the weekly picks of the day that Ernie created. Go down here to the probability in the search screen, Octavio. And I don't know if you meant 78 to 80 directly, but you could do that, or you could look for greater than 80 is normally what I do. But just add 78 to 80. Okay. Now everything in here is going to have that probability between 78 and 80 or higher. It narrows the results down, but everything there has 78 to 80. Okay, and it's already looking for weekly options because of the time frame. So it's looking across the universe of options. It's not restricting it right now by a particular stock list or anything like that. So it is looking across the universe of options, but it has to match this other criteria. So that's all. You just plug it in. Now I could save the search, and we could call it weekly NPs with 78 to 80 probability. Okay? Now every time I come back into PowerOptions to the search, Octavio, that is right there. We've got the naked puts based on the weekly criteria with the added probability. Okay? So that's the first step to do it. Or you could clear the filters and create your own search. Just set the time frame to 0 to 8 days. Don't limit a stock list. You'll be looking across the universe of all weekly options at any time. And you can always put in 78 to 80 as well. Okay, that's in the probability above filter. All right, now, question 2. If the stock starts to go against me prior to the expiration, can I use the married put insurance tool by entering the naked put position to display the profit and loss results? No, yes and no, okay? So CMG is likely not going to get put to you at 950. But let's say that CMG did fall, the tool that you'd more likely use, Octavio, in this case, is if a stock fell and you were put the position. So let's say that I sold the 1050 put on CMG and I was assigned today. It was at 1,000, right? So let's just go to CMG. Actually, let's do it your way first. I'm going to go to the insurance tool and put in the symbol of CMG, and I was put the stock at 1050, but I took in $4, so my total cost basis is $1,046. Okay. Now, see, this does show you the risk graph, but what this tool is really designed to do is the opposite. If I bought CMG at 950 and now it was trading at 1,000, it would show me the position here. It would show me, unrealized gain at this price with potentially the locked-in profit I have as well, Octavio. This tool is not designed for when it's fallen necessarily. It is showing correctly. So if I was put CMG at 1046 because I sold the 1050 put and the stock closed today at 1003, these puts here are showing me the risk I would be taking. A negative locked-in profit means that buying the June 1060 would give me a 15% loss or 15% risk. The 1100 would give me a 7.8% risk on the trade. The tool that I use if I've been assigned at a different price is the stock repair tool. It doesn't add insurance to the downside. But what the stock repair tool does is that if I put in my cost basis and my number of shares, and of course we saw it was 4% below where it is right now, what this tool does is build stock repair positions using a ratio call spread to help me get back to break even. So here's a June position where I have a cost basis of 1046 and it's showing me a repair where I'd only need the stock to go to 1,995, which is still about $40 below my cost basis, but I'd be at break even. How? Well, click on repair details. What this tool did is it calculated all potential ratio call spreads, meaning I'd buy one call at 1,000 for $44.50. and I'd sell 2, these are June 26s, 1,010 calls for $35.30. So I get a credit of $26. Okay, my cost basis was $10.46. I get 26, so my break even's $10.20. How is it showing me at $10.09? Because remember, at $10.09, what happens? Those 10 calls expire worthless, and the 1,000 call I bought has a value of $9.95. Also, at 1,009, we're down $36 from our cost basis of 1,046. So the 26 credit, $9.95, balances the $36 loss. I'm at break even now at 109.95 instead of needing the stock to come back to 1,046. And the great thing about that too, of course, is you can see it numerically here, but again, I can also see it graphically. This does cap the upside. You are doing a ratio spread, but thankfully nothing is naked. In this case, it's a stock repair position. What do I mean by nothing's naked? I am selling 2 calls at the 1,010 strike and only buying 1,000. So one of these is naked. But remember, we already own the stock. So it's like a covered call with a bull call debit spread to get me back to break even. Now, it's not a great return. But remember, this is at 1,009 or 1,010. Still 36 points below where I bought the position. But I'm at break even because the value of the call and the credit that we took in as well. So Octavio, that's the better tool to use to look at the profit and loss chart. If you're looking to repair the position, if you are goal just to convert it to a Mary Put, yeah, you can use the Mary Put Insurance tool or just use the custom spread tool to evaluate some ideas. Oh, and last but not least, answer your question, I don't do this. See, question 3 says, will you use the strategy of selling a naked put and use the Mary Put tool to recommend the best protective put, etc.? Now, I tried that before. When I first met Kurt, he was a customer at PowerOptions. I didn't even know about the blueprint. He was in PowerOptions for maybe a month and a half to 2 months before I ever talked to him. He scheduled a coaching session, just like a lot of our customers do. And I'm on the phone with him, and he's talking to me about the Married Put search, and he's saying, you know, this was in 2007-ish, end of 2007, beginning of 2008. And he says, you know, I'd like to see your Married Put tool look at a little bit more things. I want to go in the money. I want to buy an in-the-money put, but I also want to go several months out in time. And now I'm trading standard collars on a regular basis, essentially buying stock, selling a 20 to 30-day out call that's just at or slightly out of the money, and buying a near-month 20 to 30-day out put that's out of the money. Again, 2 to 3% if assigned, 4 to 5% risk if it goes below the lower put strike price. And I'm sitting there and I say, yeah, you should just do the, you should just do the out of the money put. I mean, that's what most people do, yada, yada. And he says, yeah, but most people shouldn't. And I said, okay, well, show me an example. And he showed me a position, and I think it was, at the time, it was Amazon. I think it was at $50. And he said, I want to buy the 55 put here out to December. And I said, you're paying $9, okay? You're paying 1/5 of the cost of the stock. You won't hit break even. He says, oh, let me show you. Long story short, we talked more about it. I saw the benefit of what he was doing. I saw the better control risk, that you get lower time decay over the first 40 to 50 to 60 days with the proper structure that Kurt created, as opposed to using the standard 1 month out of the money, cheap Married Put. Hey, insurance is cheap. You get to what you pay for. But I'm still skeptical. And many of you are still skeptical. And I talk to skeptical people all week. What do I mean by that? Well, even today, and it's not the wrong question. Neffy asked, why are you buying a put? Why aren't you selling a call? Why aren't you doing a covered call? Okay. Well, when you see it, it starts to make sense. And this is what I said to Kurt. I said, okay, so I spent a couple months going over the ideas with you. I've read through the blueprint. We're going to make some edits to it. Ernie and I here at PowerOptions, we're going to help you here, and we're going to do webinars together. This is all great. And I loved working with Kurt. I still love working with Kurt. Long story short, I did the same thing. My first 4 or 5 Married Put trades, I said, look, why would I open the Married Put position as a stock and put? There are better ways to get into a stock. Why don't I sell the put as a naked put, and then when I get the stock put to me, I'll convert it to a Married Put position? Or why don't I sell the near-term put first and still buy that 6-month out put to create a calendar put spread, and if I get put the stock, I'm already in the long put. And if the stock moves up, I'll just keep selling the puts on the way up. Okay? And I did this with 4 or 5 trades. Earlier you saw my success rate. What you didn't see in that is that when I open a married put, it's because my goals, or my expectation, I'm sorry, is that I think the stock has the potential. The one I choose is I think the stock has the potential to move up maybe 4 to 6%, 3 to 6% in the next 20 to 30 days. Last year, before January of 2020, when I ran over my numbers, I found that I was actually right about 72 to 73% of the time. 72 to 73% of the time I open a married put, the stock does move up 3 to 5% minimum within the first 20 to 30 days, pulled right from the married put screen. What does that mean? It means those first 4 or 5 trades that I tried was selling a naked put, Octavio, to try to get into the put at a cheaper price, or selling the put and buying that longer put to create a calendar put, which is actually a bearish position. It was actually closer to 90% of those trades I opened went up 3 to 5%, meant that I was doing worse than had I just done the married put from the beginning. Because the puts I made 1 or 2% naked yield on. I would have had a 3.5% return just on the married puts if I just bought them as married puts. The calendar put spreads lost money because they're actually a bearish trade. I didn't get anything more from the put side, and I lost more on the long put I bought without the 1 delta of the stock. So as I showed you, yes, you could use the insurance tool to potentially find puts, as you saw, based on your cost basis. It's useful to use, but if your stock's 10 or 15% down, it might actually give you a notice that your stock has dropped too much and it can't find an insurance for you. Let me just take KHC. Now, it's never been at this price recently, but let's say I bought KHC at $36. It's currently at around $29, and tried to find some insurance. Okay, that still worked, but if I went a little bit higher, it might show me that there's no, sometimes I don't know what the level is, but sometimes an earning comes up. And a warning also comes up with a stock repair. If your stock's fallen too far, it'll tell you that as well. Okay, but in that case, it's there as well. Okay, sorry, what I meant to say was in that case also, it's the, you can use it to see it, but remember when you see a negative locked-in profit, that means your risk. And it'll help you find the structure, and you can scroll through the expirations that suit your needs. October, January, I don't think there's a December here would have come up. Yeah. Okay. There you go. That's the message that sometimes will come up. No cost basis found. Your cost basis is too high. But I think you've got to be in the 40% range for that. Oh, wow. Oh, okay. Sorry. Earlier, around 2 o'clock, I think the last time I checked my trades, I thought Kraft was at 29.10. It must have really ramped up there at the end of the day. It's closed at 30.47. Excellent. Okay, so it's a good tool to use, Octavio. That's not how I use it, but yeah, you can use it to find the potential trades there as well. All right.